Finance Minister Chrystia Freeland has introduced a motion in the Commons to begin the legislative process of hiking the capital gains tax inclusion rate. Now, this increase was introduced in April's federal budget. It has run into massive backlash from the Canadian business community. Some entrepreneurs said they'll leave Canada if the rate goes up. Our guest has been vocal. He said, in his opposition, he says it will negatively affect Canadian productivity. We're joined by Mark McQueen, founder of Wellington Growth Partners. Mark, it's always great to talk to you. Give us your thesis here. What's your main worry about this increase in the cap gains inclusion rate?
Look, our country has had a very tough 20 years on the productivity front. And any time an entrepreneur raises capital, hires people, builds something innovative, whether that's in the clean tech space, biotech, life science, or software, those have good profit margins, and they create lots of jobs, high-paying jobs, and Canada's economy is better for it each and every time. And the idea that I think there was a concern when the budget came out that this entire cap gains conversation was the Liberal government playing politics. And I think they confirmed today that that's in fact what is going on here. They've had weeks of conversations with job creators and venture capital funds and entrepreneurs, both successful and striving to be successful. And every single one, by and large, told a similar story. And the story was that risk capital is hard to come by, and to tax it, to increase the tax on outcomes that are at high risk to start with, won't get Canada what it wants. And the fact that the government has ignored real, the advice coming from job creators and investors who can make the difference every single day of their lives, I think confirms that this is about politics and not about trying to make Canada a better place.
Canadians for Tax Fairness is out today with a statement saying there's no evidence to support claims that a higher cap gains inclusion rate affects productivity. For example, in the late 90s, we had an inclusion rate of 75%, higher than the Liberals want to make it. And we had productivity growth of 2.5%. So has there really been any proper evidence that this would hurt productivity?
Look, I was in the government at the time in Ottawa, in this era that they're referring to, and we were coming out of a recession. And what was going on in our country through automation and post-free trade. Think about what happened in those 10 years following the late 80s, right? FTA and the NAFTA were enacted, and we were coming out of a brutal recession. So we did well at that time because of the the trough that we were in. But to suggest that people who founded Shopify and the people who invest in firms like that, global leaders, are wrong about what this change will mean to the likelihood that entrepreneurs can raise more risk capital tomorrow. The advice isn't coming from people who've ever done this. It's coming from people who have a political agenda about more tax is better. And I think that's just inconsistent with where Canada needs to be. We're already a high tax jurisdiction. The Minister of Finance talked about our rates somehow being on par with California and New York. I think she left out a pretty important thing in that the exemption for the first $10 million of gains is a lot higher than the exemption for the first 1.25 million of gains for that entrepreneur. So, the idea that there's somehow equity in those three jurisdictions, just one more reminder that she's playing fast and loose with the facts.
But of course, the people who are complaining about this also have an agenda, an axe to grind. They don't want to pay more tax, like all of us.
Look, the overall marginal tax rate was 46%, I think, back when the capital gains rate was the inclusion rate was at 75%. It's now at 54%. So I think
the inclusion rate. Sorry, Mark. The inclusion rate is 54%. I thought it was 50%.
No. The inclusion rate was 75%. Yep. back at a time when the marginal tax rate was about the highest was 45 or 46%.
Oh, I see, yep.
Right? So as a basket, all that's going on here is just one more tax grab. The highest marginal rate is already almost 55%, of course, in places like Ontario and British Columbia. So this is not about finding fairness. This is just about paying for last year's mistakes. When this announcement was made at the budget, I pointed out $9 billion of waste in 2023 this government was part of. So this $7 billion one-time hit they're hoping to get at the end of June through this increase isn't going to do anything about funding schools or funding new housing or paying for breakfast or lunch programs. It's paying for the mistakes they made last year. And they're just not being honest about that. Now, because they're playing politics, I'm not surprised, but the job creators, I think, are the ones we have to listen to because capital is mobile. People are mobile in this day and age. You can go to Texas and start a company in a zero state tax environment and hire all the same people you would have hired anyway from Ottawa or Canada or Kitchener. And yet all those benefits that our economy would get from those ultimate IP innovations and the technology and whatnot that eventually gets developed when an entrepreneur does raise money, we don't get them. Texas does.
Mark, you've long worked with entrepreneurs. You know a lot about venture capital and private equity, and you do talk to these people all the time. It's your full-time job. What about an argument that, sure, there should be a bigger carve-out for entrepreneurs? The government has given one, but it's been derided as too small. But somebody selling a cottage, some bank executive cashing in her options, why should they get a break on capital gains?
Well, I'm not sure when you say a break what that means. I think that at the end of the day, we have to ask ourselves, what do we want as a country? And raising taxes isn't going to give us the innovative new startups that our country needs, period. The doctors have already spoken for themselves about the risks that our country will face by the increase in this inclusion rate for them. I don't need to speak about that. But what I can tell you is that for an angel investor, it's a very risky proposition to invest in startups. And every time you make it tougher for that angel investor to do their next deal, they may go somewhere else. And it's just that simple.